Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, July 10th, 2007, and the market's closed. We got a little bit of selling here today. The S&P 500 closed down 1.37%. Spiders lost $2.11 and are right now trading at 150.90. Yesterday I was saying I'd like to see it pull back down to 151.5, maybe as low as 151, down near the conjunction of the 10, 20, and 50-day moving averages. We got a little bit more of a sell-off than I had anticipated, and like I've been saying the last couple of days, it was time to be neutral because the market was extended and we didn't want to chase stocks up there. That when we had an extended market, it means tighten your stops, make sure you honor your stops, and that defense, as I always like to say, wins the game. Now, what I've been outlining the last couple of days is the potential of a setup that might be developing. Now, this is just completely something that may happen in the future. There's no evidence of it yet. But what we have the potential for is an inverted head and shoulders pattern. Someone emailed me yesterday, or maybe it was a YouTube message, said, isn't that usually a reversal pattern rather than a continuation pattern? And I said, yeah, it is usually classified as a reversal pattern, but they oftentimes actually end up being better continuation patterns, I think, because not as many people are looking at them that way. And when we have them as reversals, a lot of times there's too many people leaning in one direction, and the market goes the opposite way. But what I'd like to see in here is some stabilization, obviously. Right now, in the short term, the sellers are in control here, and there's no reason to go and be a hero and try to pick where the bottom is going to be right now. And looking at this, you could put Fibonacci on there to try and figure it out, or whatever you want. But the point is, the market gapped lower today. It rallied a little bit, but then sold off hard. It's below that 5-day moving average. Now we've got the short-term, intermediate, and longer-term moving averages heading lower. 5-day moving average flattening out. That tells us extreme caution over the near term. If you're a very aggressive trader, you want to look for opportunities to sell short stocks. Not stocks like Apple or Google, but stocks that are in good downtrends, like some of the ones I outlined in the other video yesterday. We'll take a look at that in a minute. But the S&P 500, the sellers are in control. Don't try and be picking where the bottom is going to be. That inverted head and shoulders pattern may not even set up. Right now, objectively looking, we've got lower highs and lower lows. The market failed to break out to a new high. But we've also, like I've been saying, since about June 13th, when we had these moving averages crisscross, that's where I said I was officially neutral on the S&P 500, that I thought the market was going to be more neutral over the next several weeks, maybe even months, and that's kind of what we've been having in here. We've got this range, really, of 148 to about 154.5. And until we see a break of that range, there's really no reason to think that this market's going to break down hard, because we've still got a rising 50-day moving average and want to give the benefit of the doubt to the buyers. Also, in the weekly time frame, it's extremely bullish in here still. So, there are signs, and these lower highs and lower lows do mean be extra cautious. They don't mean rush out and sell everything short. So, I said yesterday the market was getting tired. Now we got a little bit of sell-off. I'd say just be careful on the long side the next couple of days. The Qs, what I was looking for in here is, I said that it was due for some kind of pause. I was hoping that we'd get a test of 48.50, and that 48.50 was the likely area of support. That's exactly where this market closed today, down 38 cents at 48.51. So 48.50 does look like an important level. I did think also that the sell-off would be contained by the 5-day moving average. The 5-day moving average is still advancing. Okay, so we're going to be a little bit, we're going to give the bulls a little bit of leeway in here, but there are signs from these longer-term moving average that this short-term is breaking down. So we could get a bounce up and then maybe start trading more sideways here in the short term. But because of where the S&P 500 is on the daily time frame with all these, the 10, 20, and 50-day moving average, I think we still have to be careful in here looking at the Nasdaq as well, thinking that perhaps this level of the prior breakout at about 48 is a more likely area where this market might find some support. So we've got this uptrend still intact. We've got this trend line here off the last 10, 12 days or so. Looks like that's where this market is finding support for now. What I wouldn't be surprised to see would be a lower high, perhaps up to about 48.80 or so, and then a breakdown of there and a little bit further profit taking. So again, it's time to be very cautious in here. Let's see what happens. But so far, it's a controlled pullback, and maybe that 10-day moving average acts as some kind of support. We've got to remember that it's just a reference point, the moving averages. They're just a place to look at and say, typically in an uptrend, first we'll see the 10-day moving average act as support. The pullback gets a little bit deeper, it's the 20, and then the 50-day moving average that gets tested. Now we've already had tests of all those. This next leg high, this second leg higher since the 47.80 or so breakout, may not hold those same moving averages. So we've got to be aware of, it's not a system, in other words. We've got to be, the market's dynamic, and our approach to the market has to be dynamic as well. But short term, it's telling us be cautious, and that's the important takeaway from this message today. The semiconductors continue to act strong. I think a little bit further pullback to this 38.70 level wouldn't come as any surprise at all. Maybe that's where the rising 10-day moving average meets up with it. But this, this market, the SMH was only down 0.75%, versus again the S&P 500 nearly 1.5%. And looking at the 10-minute time frame, it didn't even break that rising 5-day moving average yet. So clearly much more bullish than the rest of the market, but because of the overall environment, and we've got these moving averages crossing in here, it tells us we want to be cautious over the short term in the semiconductors. The IWM got up to the top of that range. Now my daily chart has this bad print in it that Realtek didn't take out yesterday, so ignore that. I'm just going to cover it up and pretend it's not there. But yesterday I said that we're at the top of the range. Breakouts usually don't occur after we've had an extended rally like this, but perhaps it could this time. Clearly, it didn't break out from there. We're still back in the range. I was hoping for a pullback in this case to about 83.50. It came a little bit deeper than that, but we're back into the middle of this range, and the range being defined by about 81 on the downside and 85 on the upside. So overall, the IWM, just look at that as neutral. The stocks that I had mentioned yesterday, I had said that China looked bullish above 915. The stock does act good. I'd say worst case stop at this point probably ought to go at about $9.12 or so. JADE, I'd suggested purchasing the stock above $12.15. That did occur late in the day. If you're in that one, I'd say about $11.85 on a stop for Jade. MVIS, I said that this stock needed to break above 5 and a dime before before we had confirmation that the buyers took control of the short-term trend. That didn't occur, so you shouldn't have been involved in MVIS today. Omni, I thought looked good above 11.45. The stock did trade above that level. I suggested the 5-day moving average as a stop level. Let's say about 11.22 for a stop in OMNI. OPSW, I thought above $9.70 would be a good purchase candidate. It didn't get above there, so no reason to get involved. TTMI, same thing. We were looking for strength to purchase this stock. The strength didn't occur. No reason to get involved in that one. HB Fuller, FUL, looking to get involved on strength too. This gap I should have kept you away from that stock today. Stocks I thought looked weak were BLUD. I wanted to see that rally and then sell off. Clearly, it's in a downtrend, but no play in there really officially. Urban Outfitters, same thing. It gapped down. I did mention this one on Sunday's video as well, up when the stock was about 23.75. So hopefully some of you got involved in it. What I was looking for actually was a move below there if you look at the Sunday video. So hopefully some of you are involved in that one because that's fallen apart very nicely here. TTEC, as far as a short sale, I was looking for a rally and then a short. Maybe you got involved here. Officially, though, I'm going to say no play. And CBRL, I was saying below 41.60, so we had that occur. You could have shorted it at 41.60 today, so nice move lower in there. I'm not going to update this position any further. If you're in it, manage your own stops, and I may or may not have another video tonight. Be sure to check my blog later. Thanks.